guest this morning is Mike Wells, who's the Chief Executive Officer of Jackson National Life Insurance. Welcome to Lipscomb, Mike, and welcome to Nashville.
Thank you. My pleasure to be here.
Your company has just moved to Nashville. Most of us are familiar with brand names like Travelers and Hartford and MetLife. Tell us about Jackson National Life Insurance.
Well, Jackson is a Michigan-based insurance company, and we specialize primarily in retirement products for consumers, fixed and variable annuities, index annuities, for when that saver gets to the point in life when they're trying to decide how they're going to guard their cash flow and income through retirement. And they work with an advisor typically, and we're a part of that solution.
Now, you are a subsidiary of another company that has a very famous name, Prudential UK.
Correct.
And again, most of us have heard of Prudential because we think of the Rock. But as I understand it, this is not the same Prudential, so tell us the story about that.
It is not. There's two Prudentials about the same size in market cap or valuation by shareholders. They are in some very similar businesses. Both have a few that the other's not in. But originally, some employees of Prudential PLC, our parent company, were coming to the States, and they asked for the right and the ability to use the name. And as long as they promised to never suggest an affiliation between the two, they were granted that right. So they grew it into a Prudential Financial in the U.S., and we grew the Prudential UK operation. And then they met again when global expansion and internet and all the global commerce issues came to be, and we have an understanding with them, an agreement on how we use names in different regions and which logos and colors we both use, and sort of obviously respect each other's business. We're two of the largest firms in our industry, so we have a little fun with it at times as well.
Now, just out of curiosity, how much did they pay in order to use the name?
They paid nothing.
Oh,
it was,
really?
Not one of our better business decisions, but it was a few hundred years ago, so we're not holding it against anybody who's currently in management.
Everybody responsible is dead and gone.
They are. They're face on the wall someplace in the hallway.
That's right. Now, your company, Jackson National, is based in Lansing, Michigan.
Correct.
And you are moving a regional headquarters to Nashville. And I understand that you're going to employ more than 700 people here in Nashville.
That's correct.
So talk to us about the process of choosing Nashville. What other cities did you consider, and why did you choose Nashville?
Well, we started, the first cut was about 44 cities. And as that's getting easier and easier to do electronically. There's outstanding information available on the web and through a variety of consulting services. But we looked at things. We wanted a weather pattern that was different than Michigan for disaster recovery and power reason, things along that sort. We wanted a high level of presence of universities in the community. So, Lipscomb here, Belmont, Vanderbilt, all of the various schools in the Middle Tennessee area were a sort of a minimum criteria for us, and we wanted to. We think if you have a successful higher education model in a community, then you have the bright college students coming out, and typically, as you see in Nashville, they want to stay, and so we need that as our core entry-level workforce, and so that's a wonderful thing for us. We looked at transportation, how good was the airport? We looked at the political environment, and then the more critical factors for making the decision, that gets you to a broad screen. Then you get down to things like, what's the quality of living for our lowest paid employee going to be? And if you start with that, now you get into, are the public schools good? Are the neighborhoods safe? Is housing affordable? Are the communities nice at entry level and on up? And how far are those from the business centers that you might locate the office in? And if that's right, then we can build a long-term relationship with an employee, and they don't have to move to get they don't have to leave us to live in a safer neighborhood or get their kids a better education, and all those issues, they align their objectives with ours. They can grow with us, they can develop a career with us, and and as they get more successful, they can stay in that community or move around town or whatever they please. So Nashville had all that going for it. We looked at, I think some of the same cities had everybody's short list. We looked at a couple cities in Texas. Austin was our final there. Charlotte was on the list. All very nice places to live. But we just felt some of the intangibles about Nashville were tipped it in its favor.
Now you're going to have 725 approximately 725 employees. What will they be doing?
It's growth for us. So start with that. So it's a little hard to say over the next, and let's assume that if we do our best in hiring and don't change our standards, we can add about 20 or 25 a month. That's about all we can interview and check backgrounds and make sure the right people meet them and things and train. The business is part of it's a little hard to forecast because that encompasses of multiple years growth for us, a couple years out. Well, what we know is we will create some of our client service capability here. We'll create some of the business units. We're moving some that support the advisors that recommend our products. So since most of our model is through intermediaries, financial planners, stockbrokers, banks, we have people that we hire that train internally with us and support their business, and then we have people in the field that directly try and help them grow their revenue. The people in the field grow into the external jobs if they're successful. So we have a crew we moved out here and a crew we hired here for multiple businesses, for Jackson, for Curie and a separately managed account business. We'll have some executive management here, myself included. I'll split time between here and Lansing. And we are looking at one new business that we're not going to discuss yet. And then as we do acquisitions, we'd like to consolidate and bring that here as well.
You mentioned client services as you were answering my question. And when I hear client services, I hear call center.
Yeah.
Apparently you're going against the trend to expand call center operations here in the U.S. as opposed to moving those offshore, for example, to India. We just returned from India where we'll be carrying our MBA students shortly. Why are you going against the trend to expand call service operations here in the U.S.?
Well, I think first off, the metrics people use on cost of offshore call centers or outsourced call centers, either one, let's use offshore as a definition, assume we run it, are wrong. I think the people get hung up with the idea of what's my entry-level cost for the person I hire. So the stories you hear about Mumbai, and they're true, is that there's a lower cost for their recent college grad at a school than there would be here in, say, the Middle Tennessee area, and that is factually correct. For our business, I'm not concerned about what the employee makes who's hired the first day. That's not really the metric that matters. We need that employee to be with us about a year before they're really adding material value. There's a point earlier where they are, but I need them to stay 2 years, 3 years, 4 years, 5 years, and then they're outstanding and they can do anything our clients need. So the real cost is how many employees do you have to go through to get to year 2? How much training do you have? How many hiring processes do you have to go through? What's your retention of that year 2 to year 5 sort of associate? And are they willing to stay and work and grow with your company? Those costs are a little harder to measure in an offshoring activity and outsourcing activity. And typically what people do is hire a third party to manage those resources so that third party can choose who works on your project and move the best ones, their best and brightest, onto someone else's if they choose to. So I just personally believe we're much better off developing our own, creating a company they want to work for, and controlling that cost to develop a retained employee year 2 on. We'll take a little breakage the first year. I mean, it happens. We hire people that don't work out, and the key is get rid of them early, right, and get the right team in place. And then I think the other issue that's just personal belief is it's a core competency for us. When we talk to a retail consumer that a financial advisor has put with Jackson, their reputation and ours are on the line. And we should be very good at that. And we should be able to define that experience with our management team and our direct exposure. And we do a pretty good job at that. We have some number of awards in that space, and we're very proud of our folks that do that.
Mike, you're in an industry that's taken its licks in the last few years. If my numbers are correct, I think the insurance industry as a whole has burned through about 40% of its capital structure just in the last 2 or 3 years. Talk to me about the challenges that you're facing in that industry. What's the current status of the insurance industry and where is it headed in the future?
Well, I think the positive, your numbers are correct. Through the crisis, the industry at the trough had destroyed about 40% of its available capital. The positive is not only could it replace that quickly, some firms raise more money in forms of debt, some raise it in the form of equity, so there's dilution and leverage both in those. I'm not suggesting that was not us, but some took TARP, which was a decision they made, and the impact was the policyholders weren't affected. The state regulatory model works. If you think about it, and with the exception of the larger, more famous failures, there was no time, which you would have seen as a 1 or 2 level downgrade in the credit quality of these firms. They could take these hits. Now that said, that was not our experience through the process. Our capital, we lost a fraction of that. It was not from hedging or exposure to equities. Those worked perfectly for us. We had portfolio losses on our bond portfolio on investment name credits, AA companies that surprised everybody, I think, and failed, and they surprised us, and that shouldn't happen, but they did. But some of the same names that you would have read about that the feds were dealing with, we had investments in, and so we lost money there, but we didn't lose money on our core business model. And I think the key for us is we came out of the crisis with our operating earnings intact. Everything we'd sold had been profitable, and so we had plenty of operating income to cover any challenges we had through the cycle. Which is one of the, I think, key disciplines of the industry. Challenges going forward, more specifically, needs to be more transparency to consumers and shareholders. The products have become outstanding. In the last 10 years, they've really evolved to something the retiree truly needs. But they're a little too hard to understand. We tend to write them for the experts versus the novices, I think. And I think for shareholders, it's a difficult business to understand the reporting and the accounting related to insurance companies. It's hard to understand what you get and why year over year they don't perform in a certain correlation with the market or things.
You mentioned the word retiree just a moment ago. We're facing a silver tsunami, as some people call it, in this country. 78 million baby boomers in the process of beginning to retire. 10,000 people a day turning age 65 for the next 20 years.
Yep.
You must think about that a lot. Obviously, we're facing some real challenges in this country with Medicare and other issues related to aging and retirement. Talk to me about how your company is addressing that and what your thoughts are about how we cope with that as a culture.
Well, we can't create wealth. We can create growth. Typically we get the consumer when they're in their last 10 years of savings for retirement or recently retired, often when they recently retire. And so they have this IRA rollover and they sit with an advisor and we end up part of that solution. We can give them growth of those assets and opportunities to invest for growth, and we can put floors on the amount of money that they'll have monthly to live on, so we can eliminate the fear that they'll run out of money. We can't create money where there wasn't money. So where we meet those baby boomers, they are a core part of our business. They are undersaved. A disproportionate of them owe more on their homes than they have in retirement savings. So sometimes what we're doing is giving them a more realistic view of what their options are, and we help advisors do that. I think the key for us is to create a trusted partnership with them so that on the part of their money that has to be certain, we make sure it is. And they have evolved from very focused on consumption to net worth to now net payout. Am I going to have enough monthly to live on? What's that lifestyle going to look like? But they're the first generation without the corporate defined benefit plans, and so there's a pretty material change in the demographics of their savings.
Our Lipscomb alum, Barry Stowe, runs the Asian counterpart business to yours, owned by the parent company, Prudential PLC. He has the benefit of being in a culture in Asia where savings is very much a part of the culture. Maybe a third of the earnings of people in China goes to savings. I heard someone say on a recent trip to Asia, Asians save first and then spend. We spend first, and if there's something left, we save it. Are there steps the government should take to encourage more savings in this country? I think they have done I think there are steps to encourage savings. I'm politically a believer in less government, so I'm not I'll start by stating my bias there to answer your question. I think it's a little too easy to spend your rollover on your 401k. What you see, if you look at studies, you'll get a 22-year-old does the right thing and invests in the retirement plan at work, and then at 28, when they change jobs, they'll take the money out, pay the penalty, and buy a car. Use it. That's a little too. It's a little too easy to do. I think we tax retirement benefits in the United States unevenly. And I think that's a mistake. And I think that issue is bubbling up politically. If you think of the
the discussions on some of the unionized government plans, and you're reading about, coming from California, they're legendary. I think the numbers you see of government employees, guaranteed $100,000 plus, escalating for inflation, all medical costs covered. Well, that's taxed differently than your 401k withdrawal, and that's not fair. Deferred compensation plans for executives are taxed differently than the 401k. That's the other end of the spectrum. That's not fair. And there's a missed opportunity there revenue-wise, and there's a mixed message on what we believe people should do on savings. There should be an incentive to work your full life, and there should be incentive to save, to withdraw the money and pay the same taxes that we all pay on that same type of assets. Right now, it's where you work defines a lot of the benefit tax-wise, and that doesn't seem appropriate to me.
Now, your company is based in Lansing, Michigan, but you actually moved your family to Nashville from California, as I understand it. And in fact, I believe I'm correct in saying that you had made the decision to move your family separate and apart from the decision the company made. I think you've bought a farm in Leapers Fork.
We have, yes.
So it must be a very interesting contrast between your lifestyle in California and now your new lifestyle.
Yeah, it's a lot like West LA, as you can imagine. Yeah, no, it's a wonderful place. The decision of the family was in a lot of ways related to the move. There were sort of two decisions at home. My wife and I, my wife Lindsay and I, we had decided if the company didn't come here, that eventually we would come here. If that was going to be a vacation place that we eventually retired in, or something like that. So we were in the final rounds pretty impressed with the area for our family. For the company, I was in my previous role as chief operating officer. I had opened up our Denver office and spent a lot of time there, and it was a similar size operation to what we're going to grow here in Nashville. And so the discussion around the kitchen table was, I can be gone more, or we can base there. And so we brought our two sons, Jackson and Cole, out, and we spent a fair amount of time here, and everybody loved it. We decided, well, this would be a good place to be, to call home. And so it was fully supported around the table. I think we have two large dogs my wife adopted, and I think they were hilarious. They'd never seen grass, and so they stood on the porch for the first 4 days, and some of those sorts of things you didn't expect. I thought they'd be running wild, and they wouldn't go out the front door, things like that. But it's been a very, very easy transition personally. The community is incredibly welcoming. It's diverse. There's a very different experience from being here around the university to each of the communities as you drive down to where we live, and then down going south another 10, 15 miles. So I enjoy that, and our neighborhood is got a variety of sort of real farmers, and then sort of wannabe farmers, people like us, that are more of a people with a big yard than anything productive. So it's a lot of fun. You
must feel on some days that you're still in California, because when you look around at some of your other neighbors in Leapers Fork, you've got folks like Nicole Kidman and Keith Urban and other former Californians who also chose Leapers Fork and the Middle Tennessee area. So it must not be quite as much of a change as it might have been if you'd moved somewhere else.
Well, we don't, I don't think Nicole and Keith get up and say, let's go meet the new insurance guy down the street. But I think I think for Californians, the appeal is just how beautiful the land is. Mm-hmm. It's pretty rare. There's not a lot of places you could live in the greater LA area where you have acreage and rolling hills and the various working farms around you. And I think the contrast is just so dramatic for anybody coming from a major city that it's we see it as worth the drive. Now the locals see it as the middle of nowhere. Coming from Southern California, a 25-minute drive to some place is what we do to go get milk. So, this is not really, that's a mile and a half, with traffic. So it's not, sure. The drive doesn't seem long to me. Maybe after 5 years, I'll start to adjust to the local definitions of commutes, but we really like it. And I do find that our friends from California, that come and visit are just, they're just shocked how beautiful it is. And it's, I'm not sure what they expect, but it's certainly not what they see. They're quite impressed.
Well, let me close on a slightly more serious aspect of the move from California to Tennessee. Obviously, our state is in a very different financial position than the state of California. We have a very different tax structure. We have no income tax, and candidly, I don't think you'll see an income tax in Tennessee. There's a lot of opposition to it. We have a sales tax structure that makes us spend within our means. Talk to me about your observations of working with the state government. I know they helped to recruit your company to come to Nashville. You must have formed some opinions about the quality of people in the state government, or maybe the lack of quality of people in the state government.
No, I think it's a fair question. The two are important. The tax structure, the reaction you get to the taxes. I've lived in California and New York most of my working career, so I paid the highest taxes in the country, as long as I've worked. So you don't feel like you had the money to start with, so it doesn't feel like you've lost anything. Candidly, there's not it isn't direct to your own pocket. After about the fifth or sixth trip out here when we're negotiating the lease, what you start thinking about is, what do they do with the money? Because you realize how much more revenue some of those communities have to work with. Mm-hmm. And if schools work here, and if roads are good, and police and fire are good, and the things are working, then you start trying to figure out, well, if these some of these other communities have 4 and 5 times the revenue, why aren't the services 4 and 5 times better? And there's a lot of answers to that. That's not a simple question to answer. Mm-hmm. California has, the last I saw, LA County has almost $1 billion of medical and educational costs related to immigration alone. That some would argue is a federal expense. It's not, but it is theirs to bear. Sure. The structure of the government employees, the union versus non-union model primarily. They could get back to the pension issues, and California is one of the states with a huge issue in government employee pensions, and it's a material challenge for that state to grow out of. There has to be a negotiated solution. There is not a fund. You can't raise the taxes enough to pay for that. So Tennessee didn't have some of those issues, I think. What you see here as far as dealing with the government, the alignment, the state, the counties, the towns, the mayors. First off, they'll all meet with you at once, which I have never seen in any other community in the U.S. They view themselves as advocates for the greater area, regardless of where the building is going to be. And they continue after we've been here to take that approach with us. They believe it's their job to bring businesses to the community. They would not negotiate a dime on anything that would affect education or those sorts of, when you're trying to get incentives. I like the fact the incentives are public and they're on the table and everyone knows what we can or can't get. They're based on us performing. They weren't material in the decision, but they were directional in measuring the community's support, which we really liked. We have to bring high-paying jobs. We have to have the people here. We have to incur the costs. We have to train them before there's any support. But that's what you want them reinvesting in the business community, right? Because that creates sales tax revenue and home property tax and all the things that you want to see in the community. So it aligns personally with what I think is a very good model. It's a bit more of the VAT tax, if you will, than a income tax model. Because when we first looked, Tennessee had a materially higher sales tax level than California, but then both the cities and the state imposed emergency sales tax levels in California and brought them to effectively the same level. Mm-hmm. But I think as long as you deal with lower income households, and Tennessee's done a good job of this to make sure that they have a way to get back some of that. Consumption taxes are very fair. And they produce, a model where, you get the revenue and you get the incentive to invest as well. So I think it's a very effective model, and everyone we dealt with at all levels of government here was incredibly supportive of the project.
Well, Mike, we're delighted to have you and your family and Jackson National Life Insurance Company here in Nashville. You follow a great heritage of life insurance companies here, of course, with the National Life and Accident Insurance Company, Life and Casualty Insurance Company. Unfortunately, we lost those two companies through acquisition, and so now you begin to fill that void, and so welcome to Nashville. We're delighted to have you, and thank you for being our guest today on Conversations with the Dean.
My pleasure. Thank you for having me.
Our guest today has been Mike Wells, who's the Chief Executive Officer of Jackson National Life Insurance Company. We'll look forward to seeing you again next time. Thanks.